Lupin that are just about coming in. Remember, this is a stock that's down about 7% on a YTD basis, and we'd have the first number for you, 202 crores on the bottom line. That is not looking good, actually. It was expected that, the range actually has been quite wide in terms of what Lupin might report on in their profit number, but 202 crores, I suppose, would be at the lowest end of that range. It certainly is about 160 odd crores shy of our own number. 3855, that too is looking bad. So it looks like a top-down miss actually on Lupin. So so far the two numbers that we have, the top line and the profit number, both of them actually missing estimates. And again, the top line growth, I think, is coming in at the lower end of the estimates that we had, Mangla.
That's right, Sumira. And you know, the bottom line actually has come in lower than our expectations despite a higher other income. So the other income has come in at 184 crores. This compares with just about 31 or 32 crores in the comparable quarter, and despite that we've got the bottom line which has come in lower. The revenue too has missed our estimates, the net profit below. We'll try getting Ekta in a bit as well while we calculate the EBITDA. Ekta, what do you make of these numbers?
Well, definitely a disappointment which has come in. I just want to check if in case there is some amount of a one-off which has come through post the EBITDA line, which has probably resulted in this kind of a figure. The EBITDA also has come in at around 527 odd crores. So that too is quite a disappointment in terms of what they've reported. Remember, the company did say that this is going to be a sort of a consolidatory year, but there were still hopes in terms of the expectation on the margin front. And that, I think, has been the key disappointment, that, okay, maybe your profit could be impacted because of a one-off. We don't know whether that's quite likely. So you can probably assess that it is because of an operating miss, which has percolated down to the bottom line. Everybody was expecting the revenue to be flat this quarter. They were expecting it to be a consolidatory year. But it seems as though there is much more which has impacted Lupin this quarter. Maybe remediation costs, maybe higher R&D. But the margin disappointment is quite drastic for Lupin at this point, just about margins of just shy of around 14%. We have Ameya Chalke joining in of HDFC Securities to tell us about the numbers. Ameya, looks like a disappointment, doesn't it?
Yes, so these numbers on all fronts are much below on my estimates and even on street estimates. I believe the price erosion in the US has been the key reason. There was also competition in the methazine product during the quarter, which could have led to the lower profitability.
Just to put it into perspective, what was your margin expectation for Lupin this time?
It was in the range of 18 to 19%, because we were expecting, because there was some one-off in the last quarter as well. So I was expecting the margins to improve slightly.
Okay. Well, you know, if I'm just going through the P&L right now, I mean, they don't break up R&D costs, etc. So, and there is no exceptional which has come through this time. It seems to be a complete disappointment when it comes to, you know, the bottom line. It's the operating leverage which they haven't managed this quarter, which has seeped into the bottom line. You know, Ameya, was the street expecting this kind of a performance?
So there was like expectation that sequentially they will report a decline on all fronts. But I was not expecting the margins to be so low in this quarter.
Okay, well, we're still waiting by for all of the key internals such as India as well as US, etc., all of those geographies to actually be reported, because if in case there is any sort of respite when it comes into any particular geography in terms of growth, maybe there will be some amount of, you know, positivity which could seep through in terms of the numbers. So we're waiting by for that. That's still not come out. Well, Ameya, do you think that the street is forgiving the fact that this quarter was, or this year is probably going to be bad for Lupin, and there are other triggers ahead, say something like the remediation of their two facilities, the fact that the stock is already corrected significantly? It seems to have been baked in a little bit in terms of the reaction that we're seeing right now.
True. So people are expecting this to be a bottom. The earnings have bottomed out for the company in FY 18-19, and they are looking at the kind of product launches which are on the horizon at the end of FY 19 and in FY 20.
Okay. You think this could probably be the bottom, but how can we fairly assess that? This was also a quarter where, you know, India was expected to bounce back because of a low base.
So going ahead, the product launches are the key for the performance improvement in case of Lupin. So if there is a good number of products, bigger products which are coming in the second half of FY19, then obviously that will lead to improved performance going ahead.
Okay, we have Purvi Shah of Sher Khan joining in as well. Purvi, what's your sense in terms of the numbers and the margins? Are you shocked or surprised, or were you expecting it?
No, so the numbers are disappointing. I mean, there was the expectation that, you know, the numbers won't be great because we know that, you know, they are having issues with getting approvals because of the US FDA issues that are ongoing. But, you know, a SoloSec launch in the quarter that they had announced was a little bit of a respite, indicating that, you know, maybe things can get back on track. But looking at the numbers, that doesn't seem to be the case. So, yes, it's a negative surprise on numbers front.
Okay. All right, Purvi. Well, Ameya, just coming back to you then, in terms of commentary, what would you want to hear from the management today when they speak later on?
So I just wanted to highlight one fact that the SoloSec launch had happened in this quarter.
Yeah.
I believe there would be a significant amount of marketing spend which they have done in this quarter, which could have led to the margin drop.
Okay.
So I believe that operating leverage will play out going ahead. And the US product launches are the key metrics to track how things will pan out going ahead.
Okay, Ameya, I'll just request you to stay on. If we can just pull out the press release for Lupin. Yeah, go ahead.
Yeah, so I've got some of the numbers in terms of North America. This is the sales mix that I'm reading out, and on a Q-on-Q basis,
Okay.
You've got those numbers.
Yeah, I've got those numbers, so I'll just go through it very quickly. North America, Ameya, has declined 26% year-on-year, and it's declined 21% year Q-on-Q. So this is in a quarter where they have had the SoloSec launch. India has grown 24% on a Q-on-Q basis. So that's the figure that they've given out. In fact, APAC is up only around 1.5% on a year-on-year basis. Emerging markets is up around 22%. Latin America is down 1%. Rest of the world is down 30%. So it seems that besides EMEA, there's nothing which has really performed this quarter on a year-on-year basis. But I just want to bring your attention to North America and the over 20% decline that you've seen year-on-year as well as Q-on-Q.
So as for my expectation, I was also expecting more than 20% decline on the US front. So I don't see that number has missed much on the top line front.
Okay.
On the domestic side, I was expecting around 960, 980 crore kind of a number. So I guess there they have performed better.
You were expecting 960 crores?
Yeah.
Okay, so they've performed better, but adjusted for excise duty, the business is, I think, has declined.
It's grown. It's grown 30.7% year-on-year.
Okay, yeah. Yep. So adjusted for excise duty, it's grown 30.7%. So remember that this was a GST-led normalization of a quarter as well. So that was expected. And the US also, Ameya says, was expected to be an over 20% year-on-year decline. So that's what's come through. Nothing much which is written in terms of at least the margin front at this point in time. So I think we'll wait by and have to really hear what they have to say. But Ameya, like you said, it could be a combination of higher marketing costs, remediation costs, which could have impacted them.
Yes.
And price pressure. Right, Ameya?
Yes. So it could be the culmination of these three effects: the loss of market share in Methergine, then the marketing spend for the SoloSec, and obviously the remediation costs for these two plants of the warning letter.
So they've written a little more about the margins. Perhaps they've said that material cost increased by about 410 basis points to about 38.3% of sales. That's telling you that gross margins were lower. Personnel cost increased by about 160 basis points. Manufacturing and other expenses were lower, whereas in investment and research for the quarter was around 375 crore rupees. That is about 10% of their sales.
I think it's definitely the gross margins which have disappointed, and the US pricing pressure, and And let's see, we have to really hear what the management has to say with regards to that. But Amya, we're going to wrap it up on that note, and we'll wait by to hear what the management has to say. Thanks very much for joining in and talking to us. So Lupin, definitely a clear-cut disappointment. It's the margins which have, actually it's a top-down miss. The revenue is absolutely flat, and okay, the street was expecting maybe a flat revenue, but the margins nobody was expecting around 13 to 14 odd %. It's that's the key disappointment for Lupin, and that's percolated down to the profit figure. US has declined as on a Q-on-Q as well as on a year-on-year basis. India, as expected, has grown 30% year-on-year.
Okay, and the management will join us live tomorrow morning, actually, with the fine print. And of course, there's the con call this evening to look out for. So Lupin now down 2%. We'll wrap up on the show. And